Well, good afternoon, and thank you for joining us for our Focus on Ventura County Real Estate Market webinar. I'm Corby Gage, the Executive Director of Coastal Housing Partnership, and with us today is also Kim Pascage, who is the Program Manager for Coastal Housing Partnership. And today's webinar features two local real estate professionals, Cher Hurd, who is a real estate agent with Comfort Real Estate, and Linda Hall, a loan officer and manager of Guild Mortgage. So we're delighted to have these two with us today and share their knowledge of the real estate market and be able to get your questions answered too. So both Linda and Cher are part of Coastal Housing Partnerships Network. So as part of this network, that means that these real estate professionals are want to make it easier for you to become a homeowner. And they do that by reducing your closing costs. And so they reduce the closing costs for employees of member companies. So not only do they offer their expertise in guiding you through the home buying process, but they're also going to provide you savings on your closing costs. So as a real estate agent in our network, Cher contributes a portion of her commission to the buyers who are Coastal Housing Partnership employees. So that's a wonderful bonus and reduction in your closing costs. And Linda reduces the upfront costs of obtaining a loan to her buyers who work for Coastal Housing Partnership member employers. So when you're combining those savings, you're going to be able to save usually about 50% or more of your closing costs. So that's a great thing to know. That's part of the benefits that you have by working for employers who are part of Coastal Housing Partnership. And there is no charge to you to use these services. So the format for today's webinar is that I'm going to be asking Cher and Linda some questions about our local Ventura County real estate market, and the remainder of our time together will be for you to get your questions answered. So we'll be recording today's webinar, and we'll send that recording out to you. And for anyone that you know who might have missed this, who had signed on, we're going to be sending that out to the people, everybody who registered as well. So the webinar format means that your cameras are off and your microphones are off. So if you do have questions, and we hope you do, please put them in the Q&A, and you can actually ask your questions anonymously if you like. There's a little option for that. And feel free to put them in there at any time through the webinar. If the question comes to you, put it in there. It's not going to interrupt anything. We will get to those questions after kind of the bulk of our webinar and our time together. Kim will be fielding these questions, and then we'll assign them to Linda and Cher to answer. So, and if you have any technical questions at all, please put them in the chat, and Kim will be able to assist you with that. And I think Kim will be putting a number of things in the chat as well in terms of different links. And if we talk about different things, you know, closing cost savings or whatever, she'll put links in the chat. And so there would be things for you to monitor in there as well. So let's get started. We'll start by asking our panelists just to introduce themselves quickly. Linda, would you share a little bit about yourself, please?
Sure. First, thanks for having me. I always enjoy these forums. I'm Linda Hall with Guild Mortgage. I've been in the industry now since the mid-'80s. I've also worked in every facet of the industry, including processing loans, underwriting loans, and I'm currently producing branch manager for Guild Mortgage. Still have my passion for doing what I do, and that's helping all of you potential homeowners become homeowners.
Thank you, Linda. I think that's what sets our network apart, is that really that passion for supporting particularly first-time home buyers on their path to homeownership, but anyone, and really helping kind of counsel and guide them along. So you know, you should remember, as you're on your path to homeownership, that's what these real estate professionals are going to be doing, is really kind of holding your hand through the whole process. So speaking of holding your hand through the process, Cher, that's what a real estate agent does. So would you please introduce yourself.
Yes, thank you. It's great to be here. Thank you for joining us, folks. It's so exciting to see people interested in stepping into homeownership. My name is Cher Hurd. I am co-owner of a couple of real estate offices in Ventura and Camarillo. But I want to tell you my story, and it's real short. I'll tell you my why. My why to be in real estate and to be a realtor is I come from very challenging circumstances, very poor family. My parents were uneducated and did not do a very good job managing money. So we moved constantly growing up, and I never knew why. I just knew we were always on the move, and I hated it. I hated making new friends. I hated new schools. That was tough. But what I realized was they just didn't know. They didn't know. They didn't have anybody to hold their hand and teach them. So when I grew up, I decided I was gonna take that on. And buying my first house with my husband was so exciting. And having that opportunity to help people who don't know how it works go through that process and buy their first home and give their family and their whoever their circle is, to give them that stability, that means the world to me. So it's a passion for me. It's not just what I do for a living. It's when you do something you love that means something as a job, it doesn't feel like a job. And that's how I feel about real estate.
I love that. Thanks for sharing that. I think that's, when you find someone who is really passionate about what they're doing, it often comes from some kind of really deep motivation like that to support and to help others along their path. So I think that you'll find that what we're really doing as Coastal Housing Partnership as a nonprofit is trying to really bring those tools and resources, information together for you to get on your path to homeownership. And as you can see, we've got seasoned real estate professionals like Linda and Cher to help you along your path. So you're in a good place starting today, trying to get that education about how to get started and what to do. So wherever you are, whether you have already found your real estate team or whether you are just thinking about starting to buy, you're in the right place. You're going to get a lot of good information today. So thanks again for joining us. So Cher, let's start with the question that everyone asks me all the time. So let's just get right to that. And is this a good time to buy? Is this a good time to purchase real estate? And is it a good time to purchase in Ventura County?
Well, thank you. Thank you for that question. Yes, the answer is yes. And let me tell you something that just really resonated with me. Recently, the California Association of Realtors had a conference and the chief economist spoke, and he said, people ask me all the time, is now the time to buy? When's the best time to buy? And he said, well, best time to buy was 20 years ago. So if you did, great. But the second best time to buy is right now. And he wasn't being facetious. It's true. The best time to buy is really any time that's not next time later. And if you're qualified and if you're prepared to properly, financially, I talked about my mom and dad a little bit. You got to have some knowledge. You got to know what you're doing and have your ducks in a row. But if you've sought out that information you need and you've put together the wherewithal and you're ready to make the payments and you've talked to the professionals and they said you can do it, don't be afraid and think you can't do it, because now is the time. It would have been the time 20 years ago if we could have all done it then, but now's the time if we didn't do it then.
Great advice. Thank you, Cher. Linda, from a lender's perspective, with current housing prices and current interest rates, do you think this is a good time to buy? Or
I agree 100% with Cher, and I love your sharing your little tidbit there, because it's so true. Right now, we're in a market, as far as the lending, that obviously everybody knows that our rates are high. Okay. You need to think of that as temporary. Okay. So as you're going into home ownership, knowing that in the next year or so, you will be refinancing into a lower rate. So I always really focus on that. And then also the fact that right now, and Cher, correct correct me if I'm wrong, but right now I think is a good time for a buyer to be negotiating a buyer-friendly contract. Okay, and what that means is when rates do go down, many pre-approved buyers are going to be jumping in and re-entering the market. And that's just going to be that much more competition. It's going to be driving up the prices. You buy now, you are locking in your price, right? You don't have to worry about it going up. It's going to stay exactly what it was. And you won't be dealing with the frenzy it will be happening. And you'll have an opportunity to refinance in a very calm and way where you're just refinancing your rate to lower your payment and not have to go through that whole frenzy is what we call it.
Right. I agree 100%, Linda. And that saying, you and I have laughed about this before together. Linda and I know each other and she's awesome, but they tell you to marry the house and date the rate. So get that house and then that rate can change because rates change, they come down.
Yeah,
And
you're not locked into that forever.
You could always get that rate down. So that's true. And then to your point about the being able to negotiate, now is a time with a higher rate. Sometimes you can get a seller to negotiate with you.
Exactly.
So there's things we can do. And I think we're going to talk about that probably at some point, right?
Yeah, we'll get into that. I think that's an important topic. So yeah, we'll talk about that in a bit. So that's such great perspective. I think that really kind of gets us on a great foundation in terms of moving forward, because I think it takes the question mark out of people's minds. Should I wait? When is the time to buy? How do you time the market? There's so many things that people ask, and they're valid questions. But I think when you share what you've shared, that I think that really helps people understand, going forward, and again, not getting into that frenzy of so many more people now who are waiting, and now you're competing with more buyers. So you've got less buyers to compete with now. So that's a really good point. Okay, so someone's now decided, okay, I'm going to make this happen. I'm going to start this process. Share, what do you say is the first step in moving from being a renter to being a homeowner?
The first step is just what everybody, kudos for being here. The first step is gathering information, gathering the information. And before you can jump in the back seat of somebody's car and get driven around town, you've got to talk to your lender. You've got to find out what your budget is. You have to set the budget. You have to find out what all the, you need the wherewithal. You need to know what it's going to take to get to that next step. So a realtor can definitely help you at this stage find a good lender, but the lender is kind of the key piece here. If we don't have our money in order, we can't go make a viable offer, because a homeowner wants to know that you can afford to buy their property before they'll consider your offer. So we have to have that piece in place. And we also have to get realistic and real and really know what we want. I know what we want. We want a house on the hill with a view of the ocean and a pool, but maybe our budget doesn't fit that right now, but we can start on the pathway to that house with our first house. My first house was a mobile home, and I didn't even own the land, but I owned the mobile home and I had 4 walls of my own. So, it's about getting the information together and figuring out a pathway and making a plan. And that's where professionals can come in and help you. Trusted professionals can help you make that plan and get there.
That's a really good point. You don't want to be setting your sights too high or too low based on not knowing what you can afford. So I guess that's where you come in, Linda. If someone needs to come to you and get a pre-approval and find out what they can afford, what's involved in that process of getting a pre-approval?
Yeah, so, it's important, I think, one, people shouldn't shy away from a professional like myself or Cher going into their personal information, right? Because we're here to help you. We're here to, whether it's now or later, set a plan. That's what we do. That's what we're here. And trust me, there isn't anything that I haven't seen before. So the first step is the most important step, and that's making application. And we have made the process very friendly, I think, throughout the whole industry, actually. I'm not just talking about Guild, I'm talking about throughout the industry. You know, you're now able to make application from your phone online, and, you know, it takes 10 minutes, right? So it's really important to take that step. It doesn't cost you anything. There's no charge to you. And what that allows us to do is we pull what we call a soft pull, because I know that many, many people are so worried about their credit scores and an inquiry on their credit that it could go down. And so we have the ability now to pull what's called a soft pull. And that does not affect your credit score. But what it does is it gives us enough information that then we are able to get a real clear picture in combination with the application that you've made and our conversations that we've had of what your actual financial picture is currently, and then maybe what we need to do to get to where you want to be in the future. Okay, because everybody's going to have a different picture. So many people I know in my pre-approval process, and I'm sure you've heard this even from clients to share, because you're so connected with them, you're so awesome with your clients, is that, you know, they're worried that, well, I want to pay off my car first, and I want to pay off all of this debt first, right? How many times do you hear that, Cher? It's like, you know, they're thinking that they need to be debt free. Well, there's different guidelines within loan programs that you might not necessarily need to do that. And that's where we come in, and we go and we make a plan so that you have a great plan. You're comfortable with what a payment might look like. Those things are super important for us in order to work for you. You know, we represent you, you know, and that's important to have that team of people who are by your side and supporting you and educating you in the whole process. But that pre-approval piece is huge. You have to have it if you are going into contract. Nobody's going to look at it unless you have a loan approval.
So that pre-approval, does that then just gives you a number of what your payment would be every month and what loan amount you could afford? Is that kind of what that pre-approval is going to do?
Exactly.
Okay. So that obviously is a lot of good information. That combined with your down payment, you know exactly your price range.
Right. And comfortability.
Mm-hmm.
You know, that's huge. Oftentimes we can get people approved for more than what they're actually comfortable with.
Mm-hmm. And if that's the case, if someone comes to you and you tell them they're approved for a $500,000 loan and their payment is X, and they're not comfortable with that, what should they do at that point? Should they say, well, no, I'm really more comfortable with this different payment, and have you kind of rerun numbers, or what would be the next step for them in that process?
Well, the next step, we might dive in deeper too and talk about tax advantages that they might be receiving that maybe they didn't take into consideration. So there's some different avenues that we can do through education that it might make them feel more comfortable having that payment a little higher than what they thought they were going to be comfortable with. Because a lot of times you take those tax advantages into play and it's like, wow, that's not so bad. I can do that.
Okay, so it's kind of a counseling role at that point.
Absolutely. Mm-hmm.
Okay, that's so good. Now, this pre-approval, is there a charge for someone to get a pre-approval?
No, there is no charge for any of this. Sharon and I both, we do not get paid until a loan closes or a transaction closes. Mm-hmm. Okay, so it does take special people. And I'm not saying that, you know, but it does. You have to have that passion to do what we do, because we're here to guide you, and we want to get you into homeownership.
So you could put in a lot of work before you ever even think about it.
Yes.
Okay. All right. So now a couple of things on this in terms of pre-approval. If someone thinks they're not ready to buy right away, say they think it's 3 years down the road, is it still a good idea to see a lender now?
Absolutely. I can tell you a story of, and I've had many of them, but this one sticks out because it took him 3 years Okay, and he had some credit challenges. He knew he was going to be getting some raises, and we worked through it, and he did exactly what I told him to do, and he ended up buying a duplex. So he now has his own home, and he has a unit that is producing income for him.
Wow.
And
That's awesome.
it took 3 years, but we did
Sounds like it was worth it.
and it's wonderful. And he's now looking at the equity that he has to be able to purchase a larger home, single family, not units, and still have that as income producing for him.
Now, you mentioned credit challenges. I know that's something that people are always thinking about. My credit score, I got to improve my score. There's even kind of some commercials advertising different services that say, make sure that you've got the best credit score before you go see a lender. You can negotiate. It seems to me that maybe that's a little backwards.
Yes, and that part scares me, because there's so many places out there that they charge for those services. You're not going to get them free. And much of that I can do for you. So once I pull what we call a soft pull credit report, I have the ability to go and say, hey, you know what, if you do these certain things, this is what's going to increase your credit score.
Okay.
If
So
you're in that
lender
situation.
is really
As
the
a
best person to talk
As a
to. Go ahead, Sharon.
non-lender, so I'm not vested in this. I'm not going to get a loan out of saying this. But as the other party to the transaction, I can tell you, people have come to me having spent thousands of dollars sometimes for these services. Don't make that mistake. Do not do that. Talk to a trusted lender, talk to a trusted realtor, and make the guideline and path and plan with those individuals who actually do transact loans and real estate, because they won't charge you for it. If they charge you for it, it's against the law.
Yeah.
They won't charge you for it, and you'll have the same exact outcome. It'll be the same exact outcome. There's nothing that these services can or do that cannot usually be done by someone like us, like Linda and her staff, her team.
Well, you both raised really good points on that credit. I hear so often people saying, well, I'm going to do this before I meet the lender, or I'm going to pay off this credit card, or I'm going to pay off my car, or whatever. And, you know, some of the things that people do, they might be saying, well, my friend did that and that helped their credit. But everyone's credit is so individual that may not be the thing that you should be doing to help your credit. And sometimes you send it the other way. So it seems like just that credit piece is really important to be talking to a lender.
Yes, so to your point of my friend, can I just bring it in here now into the conversation? When you start talking about purchasing a home, you are going to get so much
chatter
from a friend, a cousin, a father-in-law, and they bought a house 50 years ago and they know how to do it, right? Maybe not so much. And I'm not criticizing that our family and friends want to help us and give us good advice. The best advice that you'll get from a friend or family member is the name of their good lender or their good realtor that helped them out.
Yes.
That's good advice. If they're coming to you and saying, this person helped me get there and this is what they did, great advice. But honestly, our rules and our laws change daily in real estate and lending. And if you are not in this business, you don't know what you're doing. You really don't. And it's not meant as any discredit to our loved ones who want nothing but the best for us. But sometimes they give the absolute worst advice.
That's a really good point. I think that so often, you know, people are, you know, wanting to help, and particularly if they see a first-time home buyer, they're going, well, let me help you out here. But what I find is so interesting that this market has changed so much, and real estate has changed so dramatically. Even if you're not a first-time home buyer, you've owned before, you bought before, you are still a first-time home buyer, because the lending world has changed, the real estate market has changed. I kind of look at everyone as first-time home buyers because it is such a different environment. So, you know, that's where you really need to not rely on anything you even remembered from before, because that could be
That's
different.
true.
So, okay, well, this is just such great information. So just get with the lender as soon as possible. Don't be afraid to, you know, take that step. Don't try to do anything to your credit other than, of course, pay everything on time every
Yes.
month, all your cards. You know, those are really good things to know. Sharon, let's talk a little bit about what the Ventura real estate market is like today. You know, are you seeing multiple offers? Does this market vary? Are there segments that are quite different from others? You know, what are you seeing today?
Okay, good question. It's definitely still an active and busy market. It's still tight. Inventory is still, you know, very tight, but we do see pockets of opportunities. It's an opportunity market. There are opportunities there because a lot of buyers have been scared off by the fact that they've been told the rates are going to go down. And oh my gosh, I just cringe when I hear a buyer say that, or a potential, you know, homeowner say that, because when the rates go down, it just goes crazy. It gets more competitive. The prices get more inflated. So going back to what Jordan Levine, the California Association of Realtors chief economist, said, the best time is now. It is a really good time to find one of those opportunities and make it work for you now, and not wait until the market becomes competitive again. And guess what? People also wait for that big downturn. Oh, I heard it's going to, 2008 is going to happen all over again. That was a once in a lifetime of humans event. That's very, 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 very unlikely that would happen again. And we don't have any indicators of a big downturn. We don't have any indicators of things like that happening. Guess what? I bought a house. My third house, my third house was at the absolute peak of the market in 1989. What did the market do in 1990, Linda?
Ouch.
It was a steady incline graph. The graph looked like this for a while. It was down. I can't get my hand to go the right way. There we go. Down, 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 down. But guess what? Remember what I said earlier about great time to buy, great time to sell. Always a great time to buy. That was a great time to buy. Wasn't always a great time to sell. So we didn't sell. We stayed there. And we stayed there and we stayed there. And it's been a great house. I still live there. It's a great house. And you know how many kids I put through school with refinances on that house? 3. And you know, the things we were able to do. So it's all in your perspective and how you look at it. The market has so many opportunities in Ventura County right now. There's some really good buys out there. There's different types of property. Everybody thinks of a single family house as the only pathway. Remember what I said earlier? My first house was a mobile home. I didn't own the land. I'm not encouraging everyone to go buy mobile homes that don't have land, but if that's your only option and you want your own 4 walls, then maybe it's your starting point. There are mobile homes, manufactured homes that sit on land you own. My daughter, we sold her one 3 years ago because that's what was in she and her husband's budget. Starting to look at the possibility now of a move, because now they're going to want to move into a single family, not a manufactured house, because they built some equity and they bought 3 years ago, not tomorrow. So it's that equity piece. It's getting in, finding the opportunities now and making it happen.
And then you're not paying rent. I mean, you're paying that mortgage instead of paying rent. So,
right.
You know,
Well, you're building wealth.
Right. Mm-hmm.
So it doesn't matter which way you look at it. Once you are in a home, whether it be, you know, a manufactured home, condos, I mean, condos too might be an opportunity, but you're still building wealth.
Yeah, great. So you talk about the opportunities in this market. Is that something that when you're working with a real estate agent, they're going to kind of, in that conversation, they're going to share with you, these are markets that we are kind of seeing a little lower priced, or, this market is pretty hot right now. Is that kind of the kind of conversation you'd expect to have with a real estate agent?
Yeah, and what the realtor knows is the realtor knows the houses, even the homes that maybe you go into it and it's kind of it's that girl that maybe just needs to have a new hairdo and some lipstick and change out her glasses, and wow, she's really pretty. So it's a situation where sometimes it's just seeing the potential that's there and taking the opportunity. That house was on the market for 60 days instead of 2 weeks or a week like they can be when it's really busy. And now the seller's having some questions. Oh, did I price it too high? Do I need to do some work? Is there something? So they're going to be a little more open to some negotiation. So when you come in with the offer that's asking for some things that maybe is below what the asking price was, etc., they might consider it. The other thing we have going when you're working with a realtor is we usually know our fellow realtors. We know the other players. We know the other people there, and we know how to work with each other and help everybody get across the finish line. Maybe this property owner has priced their house too high, so nobody's making offers. But if you came in and made that offer at market value, what it really should be, maybe their realtor can help them see where that price should be. So having professionals help you is really, really going to make a difference. And we know the opportunities. We see them. We go look at property all day, every day. If I'm not in my office, I'm out looking at houses or showing houses or looking online to see what came on. So we stay abreast of the market.
Mhm. Great point. Well, Linda, what's the Ventura lending market like today? We do have higher interest rates. Is there something you can do to mitigate rates, or are there different loan programs?
Right.
What are you seeing?
So I am with Sharon, the fact that it is opportunity right now for a lot of different reasons. But, going back to, the reality is we are in higher rates right now. Okay. As I said, it's temporary. There's different things that we can do. There's different things that you can do. Sometimes we can bring in maybe a non-occupant co-borrower to help you qualify, and maybe you'll get a roommate. A lot of people right now, because rents are so high, they're living in that type of environment with roommates, which could also be temporary. Maybe you have a roommate for a year and then you refinance and you're feeling more comfortable with the payment and you kick them out. No, I'm just kidding. But and then you move on. you move on. But those are some things that we do. We also there's different programs. I don't want to jump too far ahead because we were going to be talking about some programs. But we do have some buy down opportunities. And to speak to what Cher was talking about in negotiating, a lot of times what we're seeing too is sellers are able to provide what we call a seller credit that could also help with closing costs or help buy down your interest rate. And we can talk a little bit more about that when we get into the financing piece. I'll jump back into that. But there are different things that we can do and different strategies that we can do to make you feel more comfortable.
So you could actually get in with today's prices and maybe have, a way to buy down a rate so that you're not really dealing with today's interest rates. That
Yes.
You could really maybe have a lower cost there.
Yes, so you can do like a permanent buy down. So that would mean that you would permanently buy down the rate. And there's what they call temporary buy downs. So it can give you some relief for the first or second year of your loan. And so those are great options for people.
And that's what so often is challenging. I think the first year is one of the hardest when you shift from being a renter to a homeowner. You haven't kind of fully realized the tax benefits because you haven't changed your withholdings, and it
Right.
seems like a much bigger payment. And then it seems like there's some magic at the end of that first year where all of a sudden, oh,
And they're like, wow, we did it.
yeah, I can do this. And if having a roommate for a period of time, helps you through that, that's definitely a good way to go. So that might be a good option. So just kind of getting through that first year, maybe to think about it won't be so bad after that.
Yeah.
So, and no landlord's going to increase your rent once you've
Right.
purchased that home. So, you don't have to worry about that too.
But you can increase the rent.
Right, as a landlord, right. So share, what should someone expect when working with a real estate agent? I know I hear a lot of people say, oh, I'm not going to use an agent, I'm going to save some money. And that's one of the more terrifying things I hear in my business, is that someone thinks they're going to save money by not using an agent. So I always recommend someone use an agent. The seller likely has an agent. If you as the buyer don't have an agent, you've got uneven representation. They've got a professional representing them, you don't. It's rarely that you're going to save money not using an agent. So I always recommend using an agent, particularly as a first-time home buyer. But share a little bit more about, why that's the case. What can someone expect? What's the role? Someone, often thinks, well, I'm going to find my property online. I don't need an agent to help me do that. Well, in addition to finding that property, what else does the agent do? Share a little bit about that if you would.
Sure, I am happy to share that. The day in the life of a realtor and what the realtor does, the realtor value. Well, first and foremost, they should do a consultation, an initial consultation. So just like when you go to your attorney, you go to your doctor, you don't go to the doctor and he doesn't look at you, he doesn't talk to you. He just says, oh, you have a sore throat? Okay. He doesn't write out a prescription. He takes some tests, he does some talking, you figure out what's really going on, and then he says, okay, this is going to be our course. This is how we're going to treat this. This is what we're going to do. Well, real estate is going to be the biggest investment in most humans' lives. It's going to be their possibility to create wealth, to Linda's point that she made earlier. They could create sometimes generational wealth for their families through real estate. We've seen a lot of people do that. So if you're going to do something like that, you better be working with someone who's first going to sit down with you and have a conversation and find out exactly what we're going to do. Where are we at? What are we going to do? So that's just step one. If a realtor, be wary if you call them and they say, okay, meet me at 123 Fake Street, because that is not what a realtor does. We are not Uber drivers that drive you around to see houses. That's not how it works. So the consultation piece is first and foremost very, very important. You need to understand the compensation and how a realtor is paid. So if your realtor does not have a conversation with you about that, and that is something that in the court system is even being discussed right now. So I'm going to take that elephant in the room off the table. That's actually in the courts, that some realtors have not discussed well enough the compensation of a realtor and how that works. The model that's been in place for a long, long time and that's in place right now is that the seller's agent is the one that collects a commission. They contract with a seller to be paid a commission. Then through an MLS service, they agree to cooperate with a buyer's agent for a certain percentage payment, whatever that is, of their commission. That may not always exist. We don't know what the future would look like, but Buyers, you're bringing a sack of money to the table because you went and got a loan. So you are, in essence, also paying. You're paying by bringing that money to the transaction. So you're not paying anything up front, probably right now. You're not handing someone a retainer like you would an attorney, but through the transaction, through the fact that the seller is paying and then it gets spread out, that's how it's getting paid for. A buyer's agent should be negotiating on your behalf. A buyer's agent should also be encouraging you to, sometimes you're going to get scared. You're going to get a little scared. And I've actually said to people, they ghost you for a couple of days. So I get the counter offer back on the offer that we sent. You wrote an offer and we sent it to a seller and they sent us a counter offer and it's in the parameters and the dollar amount we said we wanted. And then guess what? I don't get a call from you for 2 days. You just kind of ghost me because you got scared. You may get a message from me saying, are you in or are you out? Because it's okay. If you're out, you're out. But the seller needs an answer and we need to move forward. And don't be afraid. Don't be afraid to say what your fear is. Don't be afraid to talk to your agent. Don't be afraid, but also don't get in your own way. Listen to your agent. Listen to your lender, because we do this every day and we're not emotional about it. We're doing this as a transaction, so we can take our emotions out of it and we'll help you take your emotions out of it. And we can look at it in a way that'll get everybody across the finish line.
So helpful.
Yeah, these are things we encounter. I personally, I'll tell you a story. I bought my first house. I told you that story. And I had gotten my real estate license like 15 minutes before we, close escrow on this. I mean, I just had gotten into the business, so I didn't know what I was doing. And the escrow officer sent us a closing statement, and you'll get a closing statement telling you, you need to bring this much money to the closing table and there's a little balance due and it's this much. Well, we had already taken our money into escrow and she sent me, we had taken a cashier's check at that time because this was back in the Stone Age. And she sent me a message and said, okay, I just need $234 more, then we can close the escrow. I almost died. I called my husband. He worked offshore. I called him and said, they need $234 more. What are we going to do? We had drained our bank account. We had cashed in even a couple little CDs we had. We had taken every time we had. We were waiting till payday, which was on Friday. And this is like a Tuesday we didn't have any money till Friday. My in-laws came to town. We took them to see the house. They walked through. They looked and saw we didn't have a stove and said, do you kids want a stove? Or do you want to go over to get a stove? Or do you want us to just write you a $300 check? And my husband and I at the same time said, $300 check. And that was how we closed our escrow. Sometimes you're flying by the seat of your pants on the very first one. You just have to not be afraid. Jump in. It's going to work. It's going to be okay. But, get a realtor that knows what they're doing, not one that got her license 15 minutes ago and didn't know you were going to need that extra $234 to close the escrow. Because that's what happened.
That's a great story. It seems, Cher, that like one of the most important roles that the agent has is that really knowing what price to offer on a property. I think just someone looking at a home thinks, oh, I'll offer asking, and that will be, good. That'll get accepted. Sometimes that property may be priced below market and there's going to be offers, above asking or above market. And other times there might be a situation where a property's been on the market for a long time. You can offer something below market. That's something we don't know just as someone who's a home buyer looking around, but the agents know the market so well. That seems like that's a really important piece of what you're offering your client.
Absolutely. So what we can do and what we should do when you're looking at the homes, we've set, kind of some parameters and boundaries of what your budget is. So we're looking at homes in that budget. Then you find the one, right? Well, then we're going to do what's called a comparative market analysis on that particular house. And it's going to tell you houses in that neighborhood in similar condition, or maybe there's none in similar condition, or maybe there's none exactly like it. We're going to go find the houses as comparable as possible and that have closed escrow and say, this is actually what things have closed escrow at, because that's what the appraiser looks at.
Yep.
Look at the future. He looks at the existing. And we're going to say, well, from looking at this, it looks like whatever that number is. And sometimes based on market condition, you may have to go over that number. If there's 5 offers and you really want that house, it may make sense to make a full price offer on something that, maybe wasn't as good condition as the one down the street, but it's good enough. So those are all conversations and pieces. It's a very intricate puzzle. And value, do you know what a home's value is? Literally, the value of a home is what a seller will sell for and what a buyer will pay. Doesn't have to involve an appraiser, because remember, some people have cash. If a buyer wants to pay double a house's price because it was owned by Kim Kardashian, they have the right to do that. They could do it. And guess what? That just set the neighborhood up. So that's the value of a house. There's no easy way to value a house. A lot of considerations go into it. And a good realtor knows that and will help you.
I want to step in just 1 second about the value of a realtor. Okay. And this is from a lending standpoint as well, is the fact that as you're going through the transaction, there's a very, very important piece, which is more important than an appraisal, in my opinion, is your home inspection. So your home inspection is done and they really get into all the bones of the property. We're talking electrical, plumbing, everything. So they get into that. The appraiser's only about value, okay? But that home inspection is super, super important. And they do a very, very thorough job. It's a few hours at least that they go through a property. And then they provide you with a very extensive analysis of everything that they found. So a good real estate agent, and the importance of having a good real estate agent, is they sit down with you with that home inspection and go over everything, like any issue, anything that might be. And then you have an opportunity to go back to the seller and either ask for some things to be done, to be corrected, or in your particular situation, you might go back and ask for a seller credit that you could use towards closing costs, and then rectify those things later on your own. Okay, so there is a lot going on within a transaction that is super, super important, that your realtor is going to take care of those things for you. And we work hand in hand. So oftentimes, I have guidelines I have to adhere to. So we'll be talking together. It's like, hey, you know what? Let's get a seller credit for that. We're good. Or, there's a lot of moving parts that are resolved sometimes without you even knowing it. Oftentimes you don't know it. If you have good people working for you and, you have a good home buying team for yourself, most of the stuff you're not even going to know about, because we're going to take care of it for you. It can be very stressful, but then it cannot be really stressful too. Mm-hmm. Right, Char?
Absolutely. Yeah. Linda was right on with the inspections, with all of those things. Guess what? This is all a contract. Mm-hmm. Is everyone out there, is everybody, really, really adept at contracts? Because you sign contracts. And that's one of the biggest values of a realtor is, we come with the contracts in hand. We have California Association of Realtors has a standard form contract that has been forward, backward, up, down, and sideways with legal professionals to make sure that both parties can adhere to the contract, understand the contract, be served well through the contract, and the realtor is the one who's going to guide you through that and set that up for you and write that up for you and include the things that need to be there and get you out of the transaction if it turns
If
out
needed.
that there's
Mhm.
too much wrong with this property. You sign a simple contract, not one of these contracts like the realtors have, with a seller, and you didn't give yourself an opportunity to do your inspections and have an out, you could be in trouble. Especially if you're dealing with an attorney. Oh my goodness, that's a whole nother story. Some of the most difficult clients could be attorneys because they know everything, but they don't know everything because they don't do real estate every day. Oh,
That's such a good point about the contract share. Thanks for bringing that up. So Linda, before we go to the questions from our attendees, wondering about any kind of special loan programs for first-time home buyers, and
Right.
does need 20% down? I know everyone always thinks they need 20% down. Can you give us more information about that?
Sure. So, and that's a super good question because I get that all the time. People think that they have to have. So as far as what we call conventional financing, in the market that we're in, especially with the higher interest rates that we're dealing with right now, the main conventional investors are called Fannie Mae and Freddie Mac. Okay, so they have come out with some price adjustments that lower the price for first-time home buyers. Okay, it is an income driven. In Ventura County, it's $112,980. So if you fall below that of what your adjusted gross income is, then you're able to take advantage of those. And so that's very realistic in Ventura County. And I deal with that a lot. So 3% down is the minimum down payment for that particular program. There's also FHA, which is 3.5% down payment. FHA allows us to expand a little bit more on our debt to income ratio qualifying. So when I say debt to income ratio, that is your housing payment and all of your debt obligations that is divided by your gross income. Okay, that's what that means. So there's also special programs through some bond agencies, which is Cal HFA, that can also help with some closing costs. There's also individual programs that we have. For instance, Guild has one where we pay for lender paid buy down for the first year. So let's say your interest rate is 7.25% on your note. You only have to pay a payment of 6.25% for the first year. Okay. And those funds are set aside to make up the difference in your monthly payment. So it's always, you never go negative. It's a fixed rate. So after that first year, you'd be at your 6.25% for the remaining 29 years if it's based on a 30-year loan. So there's a lot of different things that are being done to help alleviate this temporary high interest rate market.
That's great. So someone should not wait till they've saved 20% down. They should find out what loan programs are available.
Yeah, as long as they can qualify and we can make it work. That's another thing and why you need to come and speak with a lender that you trust, okay, and is professional and is able to give you your path and know exactly where you're at.
So the lender's going to share that with you. You don't have to do any research ahead of time to find out what loans are out there. You talk to the lender and they share with you what is available. The
lender is going to know all the programs that are available for the county that you're in, or what you might be looking in, because I lend all throughout the state of California. So we're going to know those types of programs that are available. And the bond programs are by county, like different restrictions and qualifications. So it's just important stuff to know.
So that's another good reason why it's good to go to a lender sooner rather than later is,
yes,
you might think you're not ready to buy for a couple of years. You find out, oh, there's a loan program available for you. You're ready to buy in 6 months. So
exactly. And they're always coming out with new things. So
great. This has been such great information. Let's jump to your questions. It looks like there's several questions here, Kim. What are you seeing?
Yes, we have a lot of questions here. So starting at the top here, always whether the money I could be applying towards a mortgage.
Kim, say that again. You kind of cut out a bit.
Sorry about that. The first question is about HOAs. Are they worth it? Or is it a waste of money that I could be applying to a mortgage?
I'll throw that to either one of you, who wants to take that?
Yeah, that's a good question. And so when we do the pre-qualification process, depending on where you're at, we're going to compare, what can you buy without an HOA fee and what can you buy with an HOA fee? And it really depends on the HOA. Now, if you do go into a transaction that there is an HOA, you receive all of that documentation so that you're able to determine the health of the HOA. But the lender's going to want to know the health of the HOA too, right? So we're going to be doing our due diligence with that as well.
Okay.
Yeah.
And what that covers, if that covers your insurance and all those
Absolutely.
things. Those are things that you would have had to pay anyway. So,
Right. And I would second what Linda said and also add that sometimes your numbers will say to you, you're going to qualify for only a condo with an HOA, and that's okay. It's a start. But sometimes when you add in the HOA, you're close enough to get into the single family home if that's something you want. So we do an overall analysis to decide really for you what is best for you. So maybe a nicer condo is better than a single family home for you that you have to do a lot of fixing. It's more your preference based on the numbers than what we're going to tell you is ideal.
right. Good point. Good point. All right, Kim.
Yeah. Sorry, the second question is how to prevent being upside down. How do you prevent being upside down in my mortgage?
Linda.
How do you prevent being upside down in your mortgage? Well, that's more driven by what the market is doing. I don't see people being upside down. In fact, it's the complete opposite now. We have, because of lack of inventory, and you can help me with this one too, is because of lack of inventory, we're not feeling the pains that some other areas are nationwide. And that's not too much because most places, the values are increasing. So,
right. Good point.
We're not, to be upside down on a mortgage, the values would have to drop considerably, but it also goes to what Cher was saying. It can be cyclical. It doesn't mean you might be upside down for a little while, but it doesn't mean that it's going to be forever.
The only time that what you owe is really important is if you can't make the payment.
Right.
Or if you need to move. So for instance, I gave you the example of myself, bought at the peak of the market. It drove my husband to distraction. He wanted to jump off a bridge, but it was all mindset. It's like stocks. Your stocks go down and everyone loses their mind. But what does the stock market do? It went back up. So it only mattered if you had to sell that stock, if you had to sell that house right now. If you can still make the payment, you're fine. Don't obsess on that. Stick it out, stay put, and it will go back up. The history of real estate tells us it will go back up if you ever get in that position. Stay the course as long as you can pay, stay the course, and it will go back up.
Okay, great. Kim,
That's great.
looks like there's a few other questions.
Yeah, next question is it smart to add my adult children to the home loan?
Linda?
For only if it was for purposes of qualifying. Otherwise, I always advise everybody in the state of California to put your property in a trust.
Okay, good. Now we are at time. So if anyone has to jump off and your question hasn't been answered, we'll send you the recording and you'll hear your answer. We're going to keep going until we finish with all the questions, but if you do have to jump off, just check out the recording and you'll get your answer to your question. All right.
Yeah,
Kim?
we have 4 more questions. The next question is, any general advice for rent to own home situations? I'm currently renting a townhome with this option.
Sure, that's probably a real estate agent question.
Yeah, so I don't know the particulars, so it's hard to give really good input. I don't know if a price was discussed. I don't know if a larger deposit was made with the idea that that was money is going from the rent monthly toward that deposit or that down payment. I really don't know the particulars, but this can be a good situation or it can be a not good situation. It all depends on the particulars. This is an area where it's kind of like doing should you go buy a house on your own? Should you sell a house on your own? No. I would recommend you can still have a real estate agent when the time comes to do an actual purchase of that home. If you have an end game in plan, buyers are allowed to hire an agent. There's such a thing as a buyer's contract, and we sign them, it's done all the time, where you just represent the one party and the seller can represent themselves if they feel qualified to do that. God love them. So I would advise that you get yourself a realtor and get help with the situation, and they can work out the payment plan on how that would work, and how they would get compensated and all of that. But it can be done.
And make sure you're getting a good deal with that.
That would be what the realtor would do. The realtor can tell you, this is your value. This is what what you could expect, and help you navigate that process. But I don't trust a homeowner to just tell you you're getting a good deal. No.
Right.
Well, and sure, correct me if I'm wrong, but you definitely need to have a contract.
Whatever
your rent to own, if you're in, you want to make sure that you have a contract, because you're going to have to solidify, it can't just be on a paper napkin or a handshake. You need to have a contract, a rent to own contract in place, so you can show that you're going to have to show you've been making the payments and all of that kind of stuff. So that's another important reason to get with a real estate agent.
Yeah, you definitely need a contract, and you need an agreement that you're going to do this, I'm going to do that.
Good.
Great. The next question is, when do you expect rates to go down?
All right. Well, that's a loaded question, Linda.
Woo! Here, let me get my crystal ball just a minute. I can say that there's rumblings, which there have been before, because I already said this last quarter we were supposed to have lower rates. They've come down a little bit, though. They have. But rumblings are basically second to third quarter of next year. That can change tomorrow. So, that's another important reason to be with a professional, because we watch this stuff all day long and know the things that affect it. But there is not a solid answer to that question.
But I would think that it's not an answer, but it's advice in terms of, if you're ready and if you've gotten with the lender and you've done your homework and you've got pre-approved, if rates come down, then you're ready to go right away. And so you're going to beat someone else to the market in terms of making an offer on a house before all these other people come in who now can qualify. So
and you'll still be able to take advantage of a lower rate.
Absolutely.
Right?
Absolutely. Great. Okay, Kim.
Yeah, I'm not sure this is in the scope of this webinar, but it says that they have a condo rental. They use the rent to pay for mortgage insurance, HOA, and property manager. Every year they have to add their own money. Is it a must to have a property manager? And what should they be aware of?
I can answer that.
Okay, great. Sure.
That by the very nature that you asked if you need to have a property manager, and I'm not being facetious in any way. I don't mean that critically. property management is the biggest risk management we have as realtors, just so you know. The largest portion of my risk management money for insurance and coverage goes to property management, because the rules and regulations on property management, whether you're the owner of the property or a realtor, very, very high risk, because you just need to know what you're doing, because there is a lot of law involved in protecting tenants' rights. So you need to know that if you're going to take that on, and it's perfectly fine to take it on yourself.
Do we have a few more, Kim?
Yeah, sorry. Last one is, are you able to talk about HELOC to acquire a second or third house?
Hey, Linda.
A home equity, sure, you can certainly, if you have equity in another property, and you can use the equity from another property to purchase a new home. There's not a restriction on that.
Okay.
And then those of you that join late, we will absolutely be sending out the recording. So do not worry. A recording will be sent out to you. Thank you so much for joining us today.
So thank you. Thank
Those
you,
are the
Linda.
the
Thank you,
ends of
Cher.
the questions there yet.
Thank you for having us.
Yes, appreciate all your great advice, and thank you. And thank you for joining on the webinar today. Hope you have learned something. I can't imagine that you haven't.
Thank you
Yeah.
so much. Just do it, guys. Just go ask
Just do it.
questions. Just do it. Don't be afraid. Ask some questions. If it's not the right time, you'll know, but you might find out when the right time is.
There you go. All right. Thank you.
Such a great panel. Thanks, everyone.
Thank you.